my working thesis now is you've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset, and AI is not an asset.
RealVision founder and CEO Raoul Pal predicts the most positive long-term Bitcoin and cryptocurrency market cap pricing. Bloomberg predicts that the world's largest crypto asset will reach $1 million per coin within 6 years, bringing the crypto market size to $1 trillion. Despite being relatively new, the cryptocurrency business has become a pariah. A peerless beast in its own world while bonds and stocks gained 10 to 20% annually last November. Fidelity Investments Director of Global Macro, Jaron Timmer, posted 2 charts showing Bitcoin's volatility compared to bonds, stocks, and fiat currencies. First graphic demonstrates risk vs reward for numerous asset classes and alternative asset classes, including gold, cash, treasury, inflation-protected securities advice. USD Global, US 640, and S&P. The S&P index leads, but here is the same chart with Bitcoin. Absolutely nothing comes close as the chart shows upside and downside volatility in a post shared on social media platform X earlier this month. The RealVision CEO wrote this is growing at twice the speed of internet adoption on a long-term time horizon. It looks like this I believe is the adoption curve that takes the crypto.
So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million. And what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like. And then on to 100 trillion, which is the size of most of the other asset classes like equities. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period. To put it in perspective, at $100 trillion, the S&P 500 has taken 100 years to accumulate $50 trillion of value. 100 years, and we will do it in less than 20.
It's mind-blowing when you put it into that perspective. It's pretty incredible.
Because people lose the wood through the trees in this space, right? It's so easy to get caught up in the drama, the volatility, the down cycles that make everybody feel like shit, then the glory times. You forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin, or you choose your asset, right? And it's like, once you realize that, it's really difficult to get that out of your head. And so it, to me, became a realization over time from about 2020 onwards that there was no point doing anything else. Even though I'm a true macro guy and I used to do absolutely everything else, I now observe what the dollar's doing and stuff like that, but only within the context of where it's going with crypto. And many greats of the industry have gone down the same journey. Many of them were Global Macro Investor subscribers, Dan Tapiero, Mark Yusko, a whole bunch of these people, Alan Howard. They've all gone down this path of, fuck it, there is no other asset that matters. This is the greatest macro opportunity of all time. So why even focus on anything else? It takes a while for people to get this. And what I keep trying to do is get people to say, okay, I love gold right now. Okay, great. Divide it by the Bitcoin chart. I love oil right now. Great. Divide it by the Bitcoin chart. And our job really is to maximize our returns. We're trying to look after our future selves here. So as an investor, you've got to take the optimal asset. Now, everything is correlated. Even crypto is part of the same cycle as technology stocks. Most equity markets, commodity markets are just lagging. It's all the same bloody cycle. So you don't need to choose one asset. Everything else is just suboptimal returns.
If you want to make the most of the crypto industry's opportunities, Pal says to play the long game, stay away from leverage, and make sure that big cryptocurrencies like Bitcoin, Ethereum, and Solana make up more of your stock than your degen bags. According to the former Goldman Sachs executive, Pal especially warns against using leverage, because that's how you mess this up and miss the best investment chance ever. Pal also thinks that the world is about to undergo a complete technological overhaul, which he says will transform every aspect of the financial world. Because of this, he warns that we may only have 6 more years of these amazing opportunities before the world changes in a way that no one can recognize. He goes on to say that only those who take advantage of these chances now will be able to sit back with their big bags and watch the rest of the world try to make sense of everything. Here are some more clips from the video.
Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't give a fuck. They just rode it and added into the down cycles, and they've compounded massive wealth. And there's many people who are not public who've done the same. But most people fear the downside more than thinking about its opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their fucking minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again. This is the worst thing I've ever done. And in a bull market, they end up buying too much shit, stupid shit. And really, to not fuck up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. I've got positions in dog whiff, hat, and bonk, and you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. And that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to fuck this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many, many, many people did, the NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame. So it's not like any of us are any better. We all have the wallet of shame. And don't use leverage as the other one. That's the other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risks. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing. Most likely, you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins. Keep it for that 5 or 10 year bet, and your future self will thank you forever for doing it.
If you look at each cryptocurrency individually, Raoul Pal's long-term prediction of a $100 trillion is just as bullish as his short-term prediction of $10 to $15 trillion. That's a 3 to 5x increase from the present $2.5 trillion market cap. Before the cycle ends in 2024, Bitcoin will go from a price range of $68 to $70,000 per coin to a price range of $280,000 to $450,000. Ethereum could also be on its way to $220,000 per token. Are you sure that Pal's forecasts and analysis are correct? Please share your thoughts, comments, and observations in the part below. Also, make sure you like this video, subscribe to the channel, and turn on post notifications to see more videos like this.